This is our first webinar, and we're launching our Board Smart online webinar series. And it is a really fitting topic. So these webinars are going to focus on timely discussions on governance matters, trending board topics, and really exploring other avenues and opportunities for serving on boards. So with that, I'm just going to spend a couple of quick minutes for those on the call to update you on LCDA's work. As you know, the year-round, what we focus on is trying to increase the demand and opportunities for Latinos to serve on boards. The environment provides some good opportunities. The institutional investors and pension funds have been advocating for more gender, race, and ethnic diversity. What has happened this year is we are seeing more activity in the federal government and at the state level. So just last Thursday, LCDA submitted testimony, and we had one of our members testify at the House Financial Services Committee. It was a full committee hearing on board diversity and exploring some of the legislation that is pending before the House. That legislation primarily focuses on board disclosure, disclosing the board composition of your boards, and a few other matters. So there's activity on the federal side. There was legislation considered in Illinois that we were also very involved with, and it is now also a board disclosure. Illinois companies will disclose the gender, race, ethnicity, and be tracked. And of course, we know about California. So we have such an important topic and such phenomenal panelists that we're going to go ahead and get started. So first, let me introduce our distinguished panel here. We have on the call and on this video feed, Adela Cepeda. She has over 35 years of capital market experience. She has advised on over 150 billion of financing. She's currently the managing director of PFM Financial Advisors, LLC's Chicago office. Prior to that, she founded and started her own financial group. She was founder and president of AC Advisory, which was acquired by PFM in 2016. Adela currently serves on the boards of BMO Financial Corporation. She is the board chair of Mercer Funds, and she serves on the boards of UBS Funds and Pathway Funds. Welcome, Adela.
Thank you.
We also have Susan Ferris-Weidecker. She is president and CEO of the Mutual Fund Directors Forum. We're going to find out a little bit more about the forum as we get started here. But Susan's very distinguished background. Prior to joining the forum, she joined as executive director in 2006. Prior to that, she held various senior positions at the U.S. Securities and Exchange Commission, including the director of Office of Investor Education and Assistance, as well as acting director of Division of Investment Management. Susan is a member of the Investor Advisory Committee of the SEC, which was formed to advise the Commission on its mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Please welcome Susan. Moving on, we're going to first ask our speakers to tell us a little bit about themselves and their trajectory to the mutual fund field. But Susan, first, if you can get started and tell us about the Mutual Fund Directors Forum.
Sure. So happy to start. So the Mutual Fund Directors Forum is a membership organization. Our members are the independent directors of U.S. mutual funds. That's closed-end funds, open-end funds, as well as BDCs. Adela is one of my fine members. Delighted to have her on this webinar. You will learn a lot from Adela. She's fantastic. So what we do is we provide a lot of education for people who are fund directors. We do white papers to sort of set industry standards for behavior for fund independent directors. And we write comment letters to regulators when interests of fund independent directors are imperiled. So Adela, I think the audience would love to find out how you have a fantastic career. It'd be interesting to hear how you ended up on a fund board.
Thank you. Thanks, Susan. That's very nice. Well, I mean, it was nothing I planned for, but I always was capital markets oriented. It's the only career I've ever had has been in the capital markets, whether it was at Smith Barney or with my own firms. And my understanding is that one of the chair of nominations of a couple of closed funds was looking for diversity, and they asked around about who might fit that category, and they were referred several times to me. So really, back in 1992 was when I interviewed for the my first foray into the mutual fund world, and it was two closed-end funds, the Lincoln National and Lincoln convertible funds. I was an expert on convertible debt at Smith Barney.
Fantastic. Great. Well, thank you for that, getting us started. So one of the things we're going to cover here on sort of what are the unique aspects of mutual fund boards. As we know, every single fund is a separate company or trust, and each has its own board of directors that's tasked with ensuring that investors get fair returns at a fair price from the advisor. So let's start with, I'm going to ask one of our panelists to start with the question, and then we'll have both chime in. Susan, tell us about what makes, what's different between the responsibilities of a mutual fund versus a public company board, and what are the different, there's a big governance role. What is the governance process and what dictates that process?
Right. So the fiduciary duties of the two sets of boards are very similar, but it's very much different in terms of what the day-to-day tasks are. So for an operating company, the board is tasked with hiring and firing senior people. They set the strategy of the organization. They decide whether the widget factory is placed in this state or that state. Operating companies have employees. That is a huge difference. A mutual fund has no employees. A mutual fund is, in essence, a large pool of investments owned by shareholders. You and I, who own shares in a mutual fund, often it's through our 401k. And so the fund independent directors of a mutual fund are tasked with essentially standing in to represent all of the shareholders, the combined weight of all of the shareholders. They are there to ensure the shareholders are, as you said, getting the fair quality of service for the price that they are paying. The fund, since it has no employees, has to contract with others to do things like investing the money, custodying the assets, selling the shares, distributing the shares. These tasks are done by third parties, and the mutual fund board approves the contracts on an annual basis on behalf of the fund shareholders. Those are contracts for services to be provided to the fund. So that is a primary role of the fund independent director, is approving the contracts on an annual basis so that the fund gets its job done on behalf of shareholders. The fund board is there to oversee conflicts of interest. Let me try and put this very, very simplistically. The entity that has a mutual fund has an interest in running the fund so that as many fees as possible come out of the fund shareholders' pockets and into the advisor's pocket. The fund shareholders, on the other hand, have a distinct interest in keeping all of as much money as possible in their own pockets. So that is, at bottom, that's a conflict of interest, and the fund directors are there to mediate, moderate, and observe those conflicts of interest, to step in where necessary. And so the law has appointed them as sort of the eyes and the ears of the shareholders. The shareholders are too diverse to effectively be able to have any control over the advisor, but the fund board has very tight control of the advisor through the contract review process and through this oversight of conflicts of interest.
Adela, what would you tell us about the 40 Act and how it's governed? Because this is a highly regulated sector, right?
Yes, I was just going to comment that basically the 40 Act, which was established back in 1940, dictates the behavior of investment companies, and a mutual fund is an investment company, and it describes conflicts of interest pretty explicitly. And by the way, the Act hasn't been altered very much since then, except through litigation and best practices. And so that's why in a lot of situations when you're looking for board members, you look for someone that has some 40 Act experience. And that has been, a hurdle, I think, to becoming a director. In a lot of cases, organizations like the investment directors that Susan runs, they do a great job of orienting directors that don't have this experience. And then there's constant education all year round. There are in-person meetings, conferences, webinars on all the different aspects of managing these investment companies known as either closed-end or open-end mutual funds. So,
Can you give us an example, either of you, of some of the nuances and new changes in the 40 Act based on litigation? So what kinds of things have changed, just to give us a little flavor of how much change or not there is in this area?
Well, this is Susan's area. I mean, she has been overseeing this for over a decade, and I think she's the best person to speak to that.
So I would say very little has changed about the 40 Act. What has changed enormously are two things. One is the kinds of investments that are available and out there. It used to be that mutual funds were long only equity. Now they are not. They have a whole wide range of investments in the mutual funds, and so that has created a more challenging environment, I would say, for directors to oversee the investments, how they're being run, making sure that they're being valued appropriately, because you see valuation is a potential conflict of interest. Every mutual fund operator would love to have the value of their mutual fund pegged higher and higher every day, but you've got people entering and exiting every single day, people buying and selling shares. So it's really important that the valuation be fair, and the board of directors has to oversee that. So the board's role has become enormously more complex, I would say, in the last 10 or 15 years. The other thing that has changed a lot in the industry is the role of litigation. there are a lot of plaintiffs firms out there that are trying to make a living suing mutual funds, and in particular, dragging in the board of directors for not exercising appropriate oversight. These cases haven't gotten very far on the whole, but it has created a lot of uncertainty in the area. It is an issue. It is something that every fund board faces.
Interesting. Let's go to Adela. Can you tell us what a little more about your experience serving on a mutual fund board, and what does a typical board meeting look like?
Sure.
Share.
Well, the meetings, again, we follow procedures long established that deal with a lot on valuation, a lot on performance. So depending on the complexity of the fund, it's usually a family of funds. So we're directors of a family of funds that includes fixed income, various equity funds like international, like Susan said, the more complex one, long, short, and absolute return, large cap, small caps, mid cap. I started out on a convertible fund. So all of these are evaluated vis-a-vis an agreed upon index, benchmark it's called, and that's kind of laid out in the documents that are filed regarding that mutual fund. And then it's our job to evaluate the performance versus the benchmark and also versus the peers of this mutual fund. And then if it's a very large mutual fund, you can't speak to every portfolio manager, but we have a rotating schedule. So and a couple of my funds are sub-advised. So let's say the large cap might include 4 or 5 different advisors, sub-advisors that handle different aspects of the objective. Some might do the largest cap, some might do, maybe high yield within the large cap. They have different objectives so that as a whole, they deliver what the investment advisor thinks is going to yield the best performance for the shareholder. So we will rotate the managers. If there are performance issues, we look to the advisor to, accelerate changes or explain why the performance is acceptable. And so that's the performance requires a lot of time. Then once a year, we do what is called the 15C review. And that is a very comprehensive review where we decide as independent directors whether the advisor should contract it to continue to manage that fund for another year. So it's a yearly process, very involved. We start working on this in advance of the meeting. Those typically are longer meetings. Sometimes the meetings are only a day, but 15C is usually a 2-day process. Most of our mutual fund meetings have become 2-day processes, although recently the SEC has indicated that there are certain regulatory matters that we can now rely upon the advisor for and don't need to approve and review independently. Susan can speak to that as well.
Yeah, Susan, tell us what your mutual fund directors tell you about sort of that, and also tell us, if somebody is considering, mutual fund board work, what is the time commitment typically overall? Of course, there's work in between, but what does the time commitment and the work for every fund?
Yes, so that's a very important question. And Adela was going through all of the things that they look at and approve during their board meetings. What she didn't tell you is that there are thousands of pages of documents attached to every single board meeting. Boards meet at least 4 times a year. Many meet more than 4 times a year. The documents that you need to read are extensive, voluminous. And if you've got a background like Adela's, you are able to go through some of this stuff more quickly because you understand where the bodies are buried and where the important issues are. But if you've got no background in the financial services area, it will take you a lot of time to both come up to speed and to get through all of the documents. Being a fund director is not for the faint of heart. It's a lot of work, and the time commitment is extraordinarily high.
Yes, I want to echo that. The meetings formally are quarterly, and they go with the quarterly performance of the fund. So if you have a calendar year fund, it'll have the first quarter is March 31st. So you will meet sometime after that to review the first quarter performance. Usually, it takes at least 6 weeks for the advisor to prepare all the materials and have up-to-date information. So you won't review March 31st until starting around May 15 and maybe even into June. Then for the 15C, I just finished one. There were 3,800 pages for this last one. So really, really extensive, really a lot. And sometimes we don't get the material till 2 weeks before. So we really are pressed. It's a time, June is a time that I say I really can't do almost anything else but concentrate on my 15C work because it's just so extensive.
Right.
Many boards, though, have ad hoc meetings for issues that come up. Boards have the compliance director report to it. We're responsible for compliance. So issues come up in compliance, we have to have extraordinary meetings for that. We might need new directors. Those are extraordinary meetings. And in one particular board, we meet monthly to review valuation. And while we're at it, we look at the monthly performance every month.
So it sounds like there's quarterly, pretty standard kind of reviews of the performance. And then if other issues are needed around new board directors, other meetings are set up in addition to the quarterly. And then, of course, then there's reviewing the fund advisors in the 15C. Adela, with your keen expertise and in this area, are there a few things that when you're looking at all the paper that you hone in on? Of course, I'm sure it's just really intense work here, but give us one example of something that you always look for or that raises a flag.
Yeah, I always look at performance and in all its different, evaluations of performance versus the benchmark versus the peers. I always look at that. That is like the first thing I go to. One of the things that I should mention about how mutual fund directorship occurs is that we have counsel for the independent directors. Sometimes that counsel is also the counsel for the funds. Sometimes it's separate. So in a lot of cases, they're helping us summarize and alert us to major issues. So that's a lot. That's a substantial support, just because so much of the mutual fund management is related to this 40 Act, and that's kind of a legal document, right? So we get a lot of help there. There also are strong advocates for us. For example, about the 3,800 pages. as directors, we want executive summaries that highlight, you know, what are the main issues that we should focus on. We don't want advisors that will just do what's called a data dump on us. So our counsel will help us negotiate that with the advisor, come up with summaries where some of that work goes to them. They know this, you know, this is their everyday 9 to 5, 9 to 10 job, right? 7-day a week job. So we want them to be helpful to us that way, as opposed to us, you know, looking through 3,800 pages to find what's really happening. We also get a lot of help when we're selecting a new fund, either way, if it's a sub-advised fund or just, you know, advisors come up with new ideas all the time. ESG is a hot area now, so a lot of funds, a lot of advisors want to start an ESG fund. So then, you know, they describe to us what they want to do. That takes several meetings to come to a concurrence on how it should be structured. So, you know, I want to echo what Susan said. It's very hard to do this if you don't love investments. I would say you don't have to, you know, love fixed income, but you have to really like the analysis of investments. Have some familiarity.
That's
think
helpful.
Yeah.
And that brings us kind of to our next area in terms of, you know, what skill sets are sought after. What do mutual funds look for in terms of skill sets? You mentioned, you know, the investing, the financial services. If someone doesn't come from financial services, are they able to kind of come in and obviously be strong participants learning more about investing? Tell me about the skill sets and who's around the table. Is it only financial people? Is there sometimes other types of skill sets that might help round out that board?
Susan, you want to take that?
Sure. So, yes, there are a lot of people with investment background sitting around the board table for sure, but many boards really want people that come from a background outside of the financial services sector, because these people can ask the questions that everyone else maybe didn't even think of asking, because we've always done it this way. Why would I even consider asking a question? So people who have run companies, have business expertise in their background, are often very good candidates for fund boards. People who can serve as a financial expert on a fund board. Boards always need people with the skill sets. If you've been an accountant or an auditor or something like that, you have the skill set to be a financial expert on the board. So if you don't have expertise or background in the financial services area, it's not a hard no, not at all, but you have to understand that the learning curve is steep, and you have to be willing to take the time to really learn the area to be a good, compelling board person on the board.
So someone who has their own, you know, they're an investor and they're paying close attention to their own investing, and granted is not as complicated and as big as what a mutual fund does, but someone who loves investing, has, as you mentioned, some either accounting or other large P&L experience, and have had to run their own, you know, budgets and pay attention and know accounting and those procedures. Does that, Susan, is that a profile of someone that might be of interest or could be a good candidate for a mutual fund board?
Yes, although let me just put a caveat in here that every single fund board is different. And so every single fund board wants a matrix of skills sitting around the table. And so if they've already got that person sitting on the board, they might not be interested, but another board might well be interested in that kind of a background. The so and the boards, when an opening comes up, most boards will take a very thoughtful look at the skill sets that are around the table and ask themselves what's missing, what point of view could we use here in this boardroom, and they will aggressively go after that sort of person.
So tell me what that matrix looks like then. So you have a matrix of skills. We know a good number is financial services background and investing expertise. What else is on that matrix?
Well, it depends a lot on the investment portfolio of the funds that the board is sitting on. So, for example, Adela has talked about mutual funds with very aggressive investing techniques or use of products. Those boards are probably going to skew towards more people that understand those products, because it's incredibly helpful in overseeing performance and valuation if you have a background in that area. Some other funds that are a little less adventuresome, shall we say, in their choice of investments or their investment objectives, they may well need more than one person sitting around the table whose background is not in financial services, but in a corporation. Someone's been in a C-suite in an operating company, someone who understands finances, not from the financial services sector point of view, but from running a company point of view.
Mm-hmm, great. Okay, so we also know that there's conflict of interest. So if you currently work for a mutual fund, you actually can't be on another fund board. Or if you're an investor, there could be some conflict of interest. Can you tell us, either one of you, of what limitations there are in terms of the pool of candidates, and second, for some of the folks on the line, what can they be doing in their own mutual fund to get experience in the boardroom or reporting to the board that might help them position them for future board fund work? Is that?
Adela, why don't I start out with the definition of independence, and then I'll let you chime in on what they ought to be doing to get themselves in position to join a board, as you have done. So to be an independent director of a mutual fund, you cannot have had, within the past couple of years, a significant business relationship with the advisor, with the principal underwriter, the distributor, or any of the major service providers. You can't own any stock in the investment advisor. You really do need to be independent. And so if you're working for a mutual fund, you are not independent for that fund. You are probably conflicted out of any other fund board service as well. So Adela, with that prologue, what should they be doing if they're working at a fund now?
Well, I think that one of the major attractions to an individual is that they have prior board experience. So ideally, if you're working in an investment environment, you manage to be one of the parties that participates in the board meetings, for example. That gives you a lot of familiarity with what goes on. That makes the interview and the explanation of what goes on during board meetings and in between much clearer. So that's one area that, and I advise, younger people ask me all the time, well, I'd like to be on a mutual fund board like you. And I say, okay, well, you work for an advisor that has a lot of mutual funds. Maybe at some point say that you'd like to get closer to that and participate in some of the roles that the advisor has for internal management, so that that's something you put on your resume. And I can't tell you what an edge that is. I've asked people that come in at senior level, and they have told me they don't want to be on the board. And one young man, I told him, I know you think that, but long term, getting this board experience is going to be very valuable to you. And he represented management on the board. And then when he left, he became the chairman of the funds that his fund complex operated. So it's great experience from top to bottom. So whether you are the board representative, the insider on the board, or someone that comes in to report to the board, it's great experience. Now, if you're in an operating company, what you could seek out is an opportunity to be one of the board members on the defined contribution plan or the defined benefit plan or any of a multitude of funds that are internally managed at your company for the benefit of, employees. And they always look for employees to sit on those boards, and that's a great way to get some of the experience.
That's great advice. So start looking at the mutual funds that are internally managed and find out how you can be part of that oversight process. So I want to have some time for Q&A, but before we do that, I want to talk a little bit about diversity on mutual fund boards, and if it's a focus area. And actually back to Susan, do you all have a directory of potential candidates for mutual funds? How can people get on the radar screen, people of color and diverse candidates and Latino candidates get on the radar so that we can help diversify mutual fund boards? How can we help?
Yes, so I have some good news, which is that the incoming fund independent directors are skewing more diverse than they had in the past. That is fantastic news. The downside of that is that the fund director community as a whole is less diverse than any of us would want. But we at the Mutual Fund Directors Forum have a director candidate database. Now, if you're working at a fund and you're not eligible to be a fund independent director, don't bother putting your name in, because that's not going to get you anywhere. But when you're in a position to look for a fund independent director position, look us up. What we do is you put your resume in our database and enter some screening questions about your background. Then when a fund board has a vacancy, they provide us with a skill set request. We run that skill set request through the database, and we pull all of the resumes that are reasonably responsive to that skill set request. We then hand them on to the board. We don't check for conflicts. We let the board do that, but the board then has a large number of resumes from which it can select candidates to interview. So when you're in a position to be considered for a fund board position, please look us up.
Right, so we'll work with you and make sure that any folks in our network or membership who want to be on the Mutual Fund Directors Forum on your director candidate database, that we make this connection and get that going. That would be fantastic. Let's go to
before we go to questions, I would just like to add that I've recently been involved in a search for one of my funds, and I went to the LCDA database of candidates, and we actually, reviewed 3 or 4 resumes there that resonated in terms of the expertise we were looking for. And one of the candidates selected actually is from the database.
That's terrific.
And a couple more came very close. So,
he or she, were they financial investors or in the financial services specifically, or outside of that with some capability?
The one did not have, it's not what I would consider in the financial services world at all.
Good.
At all, but had a great deal, tremendous financial expertise. So
Right.
it was an easy process. We also approached some of our service providers, the lawyers, the accountants, for some of their recommendations. I will say that it was a prerequisite for us that the parties recommending actually knew the people and knew us and felt that there could be a fit.
Mm-hmm. Well, and recently, I think, Adela, thanks to you, one of the mutual fund publications was promoting diversity on mutual fund boards and listed LCDA and others as a resource. So we have gotten some calls from mutual funds and actively send them our membership list, especially those who bring the kind of skill set and background that they're looking for. So that we're hoping to only increase that to be a resource to Susan and anybody else in the mutual fund world. Carmen, can I turn it over to you to ask for questions?
Yes, I just sent a notice to everyone via chat that if you have any questions, let me know so I can unmute your line and allow you the time to do so. Please let me know.
So is there something on their screen that they can
yes,
tap?
To the right of their screen, as well as at the bottom of the bottom menu strip of the feed, you'll see chat with little think box above it. Just click on it and let me know that you are raising your hand and you're interested in talking or asking a question.
And Carmen, if someone is calling from their phone, do they have the same option to be able to tell you that they have a question?
Correct. The menu is still the same on the screen.
Great. Can we leave that open and continue the dialogue, and then you can tell me if someone's come in with a question so we can. Do you have somebody?
I will do that. No, not yet.
Great. Okay, so Carmen's gonna, see if there's questions and she'll let us know. Please interrupt at any time because we do want that interaction. But let's stay a little bit more on this topic of diversity in the boardroom and in mutual funds. And Susan, so tell me, how can LCDA be a resource to you in identifying and just through our entire membership and network beyond the membership, help to bring more folks to your director candidate database?
So we welcome everyone who's qualified to put their name and resume into our database. And to the extent you can spread the good word, that would be enormously helpful because what our database, getting a board position involves essentially two things. First is your own network of people that you network with, and you say, hey, I'm interested in a fund board position. You do that yourself. But what my database does is puts your name and resume in front of people who either don't know you or have no idea that you might be looking for a fund board position. So it's tremendously important that you pursue both tracks at once, using your own internal Rolodex to talk to everyone you know that is in and around a mutual fund, including, as Adela has said, service providers like lawyers and accountants, and then to get your resume into our database so that people who don't know you have an opportunity to see your resume and consider you as a candidate.
Okay, so let's say you have to definitely work your network and both sides. Let's say you get called in to interview for a mutual fund position, and Adela, you are chair of a mutual fund. And is there a NomGov committee, or who normally kind of does some of the work to, do you all use search firms sometimes, or do you, again, use that extensive network that you might have and use Susan's organization as a resource?
Right. Well, it is one of those situations where it just depends. So sometimes we've used a search firm. More times we've done it ourselves, and it's because it's highly specialized, the area, and so that's why you have to make a special effort and to try to bring diverse candidates. In one board, I'm the only woman, and we're probably going to start a search there. And I've indicated, it just would be good to add another woman. And I don't know if there's going to be consensus. I'm obviously outnumbered, but I hope that will help us narrow the field. So in a lot of situations, the advisor as well as the board is interested in diversity. They are. So I would say both of the candidates coming to this on this new search, they're both diverse candidates.
And so Adela, did you have someone have a question, Carmen?
Yes, there's a question from Mr. Frank Lopez Balboa. He is interested in knowing if there are conflicts between being both on a corporate board and mutual fund boards, or can one be on both?
And I'll start, Adela. There's generally no conflict whatsoever as long as you're not on the board of an advisor. If you're on the board of an operating company, Target, Walmart, something like that, there's no conflict, even though your portfolio manager might in fact buy stock in those operating companies. Many, many fund board directors sit on corporate boards, operating company boards as well. What is less common is to sit on two large fund boards, and that's because the conflicts become overwhelming fairly quickly, particularly if they're a largely sub-advised shop. So, but service on an operating company board and a fund board is generally not a problem.
Yep, I think that's correct.
Great. So, Adela, you're chair of one of the fund boards that you serve on. You have, tell me about the interview process. You have three phenomenal candidates.
Right.
What stands out for you for folks on the line who want to get some insight in terms of how they can prepare for that interview? Well,
it's incredible, but having just gone through the process and interviewed, I think, 7 candidates, and we do have a nominating and governance committee, and that chairperson, was kind of managing the process of the search. But it was just the directors in the room doing the interview, and we look for people that we think are going to be a natural fit, that they're going to be intelligent, that they're going to raise questions, but that also, our meetings are intense. Some of them run, like I mentioned, 2 days. So you want to be with people that, aren't trying to be competitive with you, for example, have to have the last word. That kind of thing can really be detrimental to the board dynamics. So someone that will bring their insights, be curious, because things do evolve in the 40 Act world and have changed, as Susan mentioned, dramatically since inception of the rule, and are constantly shifting, because the SEC, which is our regulator, puts its focus on different aspects of the management of the funds, and that highlights certain procedures, and then you have to think about things in a really intelligent way, I guess. And so we look for high intelligence, familiarity with investments for sure, and in a good personal dynamic.
Esther?
Yes.
We have another question. This one's from Mr. Romy Diaz for Adela. Adela, can you speak a bit more about ESG, which seems very different from the general interest in financial services experience?
Well, actually, this is quite popular. ESG investments are quite popular in Europe. So they're less here in the United States, but they're coming. And there's a thought that the younger population is interested in these kinds of investments, and so advisors are always trying to stay ahead. And by the way, it stands for environmental, social, and corporate governance, or governance, ESG. So it can be down to I think it started with investing away from tobacco and different different elements that were considered negative, and now it just goes to good governance, diversity. It can be granular, and I'm seeing it across the board. An interest, I haven't seen an interest that spells, billions upon billions, but I'm told in Europe, these funds are multi-billion-dollar funds.
So if you have a fund that is an ESG fund, but this fund is, say, focused on, the environment, and they want to invest in companies with a good track record on that, what does that board look like? Would they want to have people on that board that will help them assess, whether there is a strong sort of environmental record? They probably have some measurements so that only companies on that fund have a certain kind of, they score highly. Yeah, they score highly in terms of their, environmental policies. So what does that board look like? Is there some?
So I wanted to clarify that. I know you said that originally, but generally a mutual fund family will have several funds in it, and it'll be the same, it'll be under the same directorship. Yeah. So that same board, it would maybe have a different portfolio manager that is more expert in ESG investing, has some kind of track record in this, has some idea of how to convert it to a measurable content and performance model.
Okay, so that's helpful. So you have the manager who brings that expertise and can report to the board, though, how they're measuring that content, so that they can check off the box that, yes, this we're investing in this company because they meet that record. Okay.
Right.
Susan,
Esther?
Yeah. Okay.
Just someone is asking to see if maybe if LCDA can share Susan's contact information. They are interested in getting on the database so that they can be referred if they're viable candidates for any of these mutual fund board searches.
Sounds great.
Absolutely.
So,
not a problem.
Thank you.
We'll share that and the website. And Susan, you might have, besides the website, a direct link to the database. That way they can go right in there. We'll get that out to everyone on the call and beyond. And but please contact us if you're not already on our database to make sure that we're enlisting you in that as well. Susan, can you tell us a little bit about how the mutual funds, I know that there's just so many different types of funds now, and I don't know if you have, a number, and how that compares to the number and size previously and what it looks like today. It's such a growing space.
So mutual fund assets are definitely getting larger. I believe that there's something like 19 trillion in the in this area, and it wasn't always that way. But what has happened?
Is that assets? Sorry, is that assets under management combined? Yes. 19 trillion? Okay.
Yes. Yes. But what I will also say is that there's become increasing concentration. So the top 3 largest mutual fund families account for about 20% of the assets under management. And the top 100 mutual fund families account for close to 99% of the assets under management. There's been a lot of movement in the fund area, consolidations, mergers, and things, as there have been some sea changes in the way people invest. Passive investing has become much more popular in the last decade or so. Actively managed funds have been giving assets over essentially to the passive indexed funds, for example, because this is one of those macro trends in investing. It may well reverse itself at some point, but it's going strong right now. So increasing consolidation, a lot of mergers and acquisitions happening right now in the fund universe.
So the big ones you would say like Vanguard, BlackRock, State Street. What are the big ones?
Yeah, those are big ones.
Those are the 3?
Yes, they've got over $1 trillion each, and so they're big and they're getting bigger for sure. There is still, however, a lot of new entrants into the fund industry, and there is a lot of room for unusual or unique niche investing products that investors want and can fill in their investing needs. And the fund industry is very vibrant and continues to be full of new entrants and a lot of exciting new products.
Wow, that is really dynamic. We are at the 5 o'clock hour, and there's just so many more questions to ask, but I really want to first just thank the panel. Susan and Adela, this has just been so informative and a great opportunity for us to continue to follow up, make sure you've got, a growing number of Latino candidates, diverse candidates that will add great value to the mutual fund board, which I know we have, and we'll continue to do that. Any just final 2 words, if you have any, then we're going to wrap it up.
Well, I really enjoy my mutual fund work so much. I mean, it's very intellectually challenging, and I just enjoy the participants at various levels, and it's just I can't say enough. I love investment, so it kind of goes with that.
And I would just say that the fund industry needs a lot more Adelas.
That's terrific. Well, we can't thank you enough for being part of our inaugural, our first launch of our webinars. With that, we're signing off. Thank you for joining us.
Thank you, everyone.
Thank you.